Good morning, everybody. Hey, welcome to Thursday, the 15th of August. Hope you're doing well. Yesterday, well, what did yesterday look like? It was, let's see if I can even find it on my board today. Hey, it was all red, all green, rather. Good day yesterday as far as the S&P 500, the Dow, NASDAQ eked out a small gain. Hey, yeah, today we've got retail sales coming out, and that is affecting our markets. We'll talk about that and more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that in this world we live in, there are so many things that are out of our control. You can take control of your investment portfolio by knowing how much risk you have versus how much risk you should have in your portfolio. Give us a call, 863-382-0037 to schedule your core retirement analysis.
Blondie there. It is time at 8:42. Find out what's going on Wall Street today. Boy, is the economic activity up there. Or at least the reports are. And we got some good news to start us out this morning. On the line with us on the telephone, Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, how you doing this morning?
Hey, good morning, Dave. I'm doing well today as we get, hey, we're close to finishing out the week, and we had a pretty good day yesterday on the markets.
Yeah, I can't complain about it. Yesterday's numbers, the Dow was up by 243 points. That's 0.6%. Standard & Poor's up by a little under 21. NASDAQ up by a little under 5. It looks like I won't call it a flight to quality, but it looks like the big portfolios are kind of rebalancing toward quality as things are starting to look a little bit more normal now. We had a run on the NASDAQ, and now we're back to having a run on the blue chips, right?
Well, that's right. That's what it looks like. But we'll look at today's numbers, and NASDAQ gets to come back in favor again.
Kind of indicating things are looking better. The government data dump starts our news for the morning. First thing that comes out every Thursday is initial unemployment claims. That's going to be probably what the Federal Reserve, when they do their retreat later on this month in Wyoming, that's the time that all the big heads get together and talk about it. Talk about what they're really going to do to us, regardless of what's going on. First-time claims, 227,000 this week. That was a substantial decrease from what they expected. It's about 6,000 less than last week. Market expected the unemployment claims to go up. They actually went down by about 6,000. Now, I combine that with a big surprise on retail sales. Market expected July's retail sales to increase by 0.3%. We ended up getting a full 1% increase in retail sales. I put the fact that the unemployment claims are going down with the fact that retail sales are overachieving by a bit. And that stuff we were talking about yesterday about a soft landing for the recession, it's starting to look a little bit more likely, isn't it?
Well, it is right now, Dave, and you and I, we've bounced on and off of that for a little while over the last year or so. But so far, it is looking like maybe we can have a little soft landing here. And I know it's probably a good news that retail sales are improving more than expected because we had that little rush bump. I think it was last month that we were not doing so well on retail sales. So we continue to watch all the different angles that are out there to kind of see if we can figure out which way the Fed might go come September. And I'm still thinking that with the numbers we saw earlier this week that we're probably going to see a rate decrease in September, and that's a little concerning a little bit, I think.
The betting odds on the market right now are actually talking about a full 0.5% rate decrease in September, which I kind of flippantly yesterday said is going to prompt the Republican presidential ticket to invent a whole bunch of new four-letter words when that happens. It needs to be said, and you made the point very strongly, that a 1% bump on retail sales last month is undeniably good news, but the annualized retail sales increase after that report is only 2.7%. That's a pretty modest growth rate in any main macro to the economy, I would think.
Well, I think so too. And we still are hearing it on the street that people are suffering. They're buying the things that they have to buy, not the things they want to buy, and so that continues to put pressure on the economy.
And at the same time, when we get to the corporate reports with our lead report this morning, we'll see that the flight toward discounting and price advantage appears to still be going on all right. I was giggling about this because I always have something that catches my eye that's just hits my strange button weird. We now have a new macro to watch as far as inflation is concerned. The Federal Bureau of Economic Analysis put out a chart this morning that showed that if you measure the let's see, what do they call it? The core CPI annualized 3-month percentage change, not what our CPI is, but what the annualized 3-month percentage change is, we're already under 2% inflation. Aren't you happy to hear that, Phillip?
You know, those people in Washington, they can be very creative in ways to come up with things that make it look better than it is.
Yep.
And that's one of them. And that's one of them.
These are the people that say a tax cut is spending. Now we're tracking what the change is each month and projecting the inflation rate down under the Fed's target, even though we're still the better part of a full percentage point away from it. And I'm kind of going, okay, well, that ought to telegraph, if nothing else, where the administration wants the interest rates to go in September, doesn't it?
It really does. And let's face it, if they lower interest rates in September, that'll go against what you think should happen politically, right? Because who's that going to help?
Oh, yeah. And after the hinky reaction we had in the market last week, it's obvious the volatility is being encouraged by the fact that, they're concerned about the economy slowing down. Same drum you and I have been banging now for months. So I understand, and I'm frankly at the point right now, for the sake of stability, that a quarter point might actually make economic sense, even though I'm still standing on the notion that it really takes a ballsy Federal Reserve chairman to reduce rates or even increase or reduce rates, make any change during a presidential campaign. But it's starting to look like a fait accompli, doesn't it?
It is starting to look that way. At least the markets are surely pricing it in.
Absolutely. The fact that they're pricing in a half point right now to a large number of the analysts, I'm kind of worried about that. Because if we only get a quarter point, we're going to have a really bad week come the third week in September, I'd wager. You can't win. I've always said studying the Wall Street is kind of like a study in abnormal psychology. Speaking of abnormal psychology, I kind of alluded to this down the line. Walmart's always one of my favorite targets, and as a bellwether, being the biggest retailer in the country, they reported. What have we got out of Big Wally World?
So Walmart did well. They beat by 2 cents a share on earnings, and they came in about $500 million more in revenue than expected from the analysts. And so that was some good news for them. Now, if you look at year over year, though, Dave, they're not there. They missed. If you look at year over year, they're down from where they used to be. But still, if you're looking at retail, you got to give them credit that they've made some progress there, and they're trading up today almost 8.5%.
Wow.
Yeah.
I kind of get the feeling that a little beat when the company's that big makes a big difference, doesn't it?
Yeah, it does, Dave. It does. It doesn't take much sometimes for that to happen. Then we had Cisco Systems reported. Kind of same thing. Cisco Systems had a good quarter. They beat by 2 cents a share. Revenue was just a little bit above expectations, but still, but they beat across the board. And they did talk about they're going to lay off about 7% of their workforce. So that restructuring is going to take about $1 billion pre-tax charge to their financial results later this year. But they're up almost 8% this morning before we get going.
So for folks that don't know the brand, Cisco makes the big routers, especially the big ones that are powering the artificial intelligence server farms. So they're benefiting from the AI boom of all these companies putting in fancy pants servers. And it works. Evidently, by the employee cutback, it means they're not planning on designing anything new and just selling what they got, right?
Well, or I'm not sure. It doesn't tell me where those people are at within the system, but it could be just middle management they're getting rid of.
Which sometimes isn't a bad thing either in some companies. Too many Chiefs, not enough Indians happens a lot. What else you got?
So we got Tapestry, which is the parent company of the retailer Coach, as well as some other high quality brands. They saw their earnings increase by 4 cents more than estimated. Revenue topped estimates as well. They're up 8% this morning. The retail guys are doing pretty well today. Nike, now they didn't report today, but Bill Ackerman, he's the head guy at Pershing Square Capital Management hedge fund. They bought a whole bunch of Nike stock this last quarter, and that's helping Nike bump up about 5%, as well as the same thing happened to Ulta Beauty. Ulta Beauty, their regulatory filings saw that Berkshire Hathaway bought $266 million worth of shares in their company. And that helped them out by 11.5% this morning. So
that's kind of like inviting the 500-pound gorilla in for tea. That's always good news.
Yep, it is. The last retail I have for you today is John Deere. John Deere reported, and they beat as well. They came in at $6.29 a share versus $5.63 expected. Revenue about $500 million more than expected as well. You got John Deere up about 1.5% this morning.
Well, you got all kinds of merry sunshine this morning. I'm waiting. I'm itching for the futures. Generally up day yesterday. How do we look 45 minutes early today?
I'm seeing a lot of green ink today, Dave. A lot of green ink. We got the Dow up 0.9%. S&P 500 is up between 8 and 0.9% this morning. NASDAQ 100, get this, Dave, they're up 1.1%. And then the Russell 2000 up 2%. Huge
they like
numbers.
The retail numbers, don't they?
They really do. On the other side, we got silver making a huge jump overnight, up 3.5% this morning to $28.27 an ounce. Gold's up 0.4, and crude oil must have been down yesterday because it's below where we were yesterday morning, but it's up 0.75 from the close at $77.56 a barrel.
Yeah, as long as it sticks there, I just don't want to get back above 80. Overseas markets, the Asian rim generally up at the close this morning. Hong Kong did not have a great day, but most of the rest of the index is up in the range of about 0.5%. European community is relatively happy with stability over on our side, and a modest up day yesterday made them happy. European index is up between 2/3 and 0.75% halfway through their day. Getting a retirement plan together, the closer you get to those 60s on your driver's license, the better a plan you need and the more firm you need to stick to it. How do I find you to get a plan so I can retire, Phillip?
That's why I developed the Core Retirement Design to help people design that retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And you and me here again tomorrow morning to tell you what happened today. Thank you very much, and I'll see you then, sir.
All right, man. You have a great day.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope you'll join me again tomorrow, same time, same place. Until then, take care. Bye now.